Yeah. Um, Good evening, friends. Yeah, let us start the discussion. Just give me 2 minutes. Yes. So, yesterday we are through with some three standards, four standards, whatever. Correct. Accounting standard 16 over. Four standards are over. Correct. Now, today we are left with three standards. One is a major standard, that is accounting standard 10. Correct. And the next important standard is accounting standard 11. Then next we'll go to accounting standard 13. Whatever the time available, that much we can utilize it for accounting standard 13. Okay, yeah, if time available I will discuss entire topic. We don't leave anything. And if time is not available, to the extent we'll utilize it perfectly. Okay, right. Right, all sound and everything, is it okay? Is everything fine? Yeah. Okay. Yes, my dear. Chalo. Before getting into the subject, yes, there is a small information. Unacademy has launched a program, that is CA Iconic program. Yeah, Iconic program. In this is specifically for intermediate. Also, it is available, right? And this Iconic program, there are so many advantages from this Iconic program. One is personal coaching, right? Personal coaching in the sense they will be appointing one mentor, right? So one-to-one discussion will be taking place, and the mentor is going to help you. Correct, he is going to help you to plan your, for examination preparation plan, and etc etc. He is going to discuss with you. And if you have any questions with respect to specific subject, yeah, there are doubt solvers who can help you in that. At the same time, if not possible, they will revert back to the teacher. Yeah, you can get it, they will get it solved by the teacher directly, right? And there is evaluated test papers. Yes, test series, there is separately examination will be conducted. For each subject, three tests will be conducted. Once you are through with 40 percentage of syllabus, one test, 80% is another test, 100% third test will be conducted. So in IPCC CA Inter, you have 8 subjects, 8 into 3, 24 times you will be writing the paper. That obviously will give you good amount of confidence, right? And in plus course you will not get the printed material, but in the Iconic course you will get printed material is going to be available to you, right? And they will bring some industry experts to give whatever their experiences, their how did they clear exam or something like that. They will arrange some classes or something like that. Some one session, something like that. They will share their experiences, and they share their experiences, that obviously will be useful to you. Okay, right. And other already, what is that? Yeah, there is no, what is that? Number of reviews, number of views concept is not there here. If you are subscribed for 12 months, then 12 months, how many times you want to watch, you can watch it. Okay, yeah, that is what available. Fine. Yeah, next, this live mentoring I told you already. Yeah. And this evaluated test series, I told you 40%, 80%, 100% concept I have explained to you. Correct. Now once you write examination, it will be corrected by them, and they will come back with feedback. Correct. Now what are the improvements you are supposed to take care, that all you, it will be there. Yeah, Iconic subscription is there for CA Inter and CA Inter Plus. Okay, CA Inter Plus Foundation, that combo also is available. Okay, right. And if you take, use this code SSYESHAS LIVE live. Yeah, this code you please use it. Then you will get 10% discount will be available in the fees amount. Okay. Yeah, this is what CA Foundation plus CA Inter. It's available for both. Yes, my dear. So that is about the information. Yes. Now let us give me 1 minute time. I will add some number of pages so that again and again will not be bothered. Perfect. Right. So accounting standard 10, as we already planned. So first I will focus on the accounting standard 10 part. We'll finish that, and then we'll go to the right other standards. Right. So accounting standard 10, that is PPE, property, plant and equipment. Property, plant and equipment. Property, plant and equipment. Okay. Yeah. PPE. Yeah, it is one of the big standards, obviously very big standard compared to other standards. Okay, very important standard. Obviously every time there will be one question from property, plant and equipment, directly, indirectly, somehow they will be accommodating the standard, which is very much correct. Now once you clear IPCC, I mean CA Inter, I mean to say, once you clear CA Inter, once you go for articleship, correct? No? Don't you need to, any company you go for audit, obviously there will be property, plant and equipment, that is fixed assets basically, right? So when there is fixed asset, obviously what are you supposed to do? You have to audit. You have to audit means whether they have accounted as per accounting standard 10. That is our basic question, correct? Na? Right. Whether first, if you know the standard correctly, then you can test whether they have done correct job, wrong job. Agree? Right. Then if they have not done as per the standard, then you can complain to your boss. Your boss will make them correct. Na? They make it corrected. Something, they will take the appropriate action. Agree? Yes. That's why you need to have good amount of knowledge with respect to standards. Then if you know the standards correctly, then you can say you know accountancy. Because what is to be done as per the standards, that is what major. Fine. Yes. Hello, my dear. Property, plant and equipment. When I say property, plant and equipment, yeah, each standard is applicable. Each standard is, what do we say? Each standard is not applicable. This is not applicable. It is not applicable for what, sir? One, what it says, it is not applicable for biological assets. It is not applicable for biological assets, but other than, correct, but other than what? Bearer plant, other than bearer plants. Okay, what do you mean by other than bearer plant? That means for bearer plants, correct. Now for bearer plants, yes, accounting standard 10 is applicable. You have to follow accounting standard 10 only, right? What do you mean by biological asset? What do you mean by bearer plant? Okay, sometimes they asked a question about bearer plant definition. Understand? For 3 marks, they ask suddenly one question. Yeah, it can be any day, anything, any point of any a question can come from even definition. So be very careful with it. Okay. Yeah. When I say biological asset, okay. When I say biological asset, when I say biological asset, my dear, what is biological asset? Biological asset is living animal. Yes, biological asset is living animals or living plants. Yeah, it may be living animal or living plant. Okay, so if it is living animal, correct? Now you have say, suppose I have a farm, sir. I have cows, I have buffaloes, I have birds, something like that. No, for that, no, there is no standard actually. In accounting standard, there is no AS. Then what do they follow, sir? They will follow industry standards. They will follow industry standards. Exactly. Okay. Yeah. Industry may what other people are following, what makes sense based on the given circumstance, they will follow. Suppose you have crops. You have crops like paddy, correct? Now wheat, right? Maiza or something, whatever it is, maiza. Many crops are there. These crops also, these are plants, correct? Now for this also, correct? Not applicable. Okay. What do you mean by bearer plant? Yeah, bearer plant is for what, sir? Yeah, bearer plant means what? When do you say one plant is a bearer plant? Yeah, when it satisfies 3 conditions, that is what we say. When it satisfies 3 conditions, then we say it is a bearer plant. Okay, right. What is the first condition? First condition is it is meant for producing. It is meant, correct? Na? It is meant. Why the bearer plant is there? It is meant for producing agriculture produce. It is producing. What are you producing? What is your output, sir? Output is equal to agriculture produce. Agriculture produce is what? My objective. Yeah. What do you want to do, sir? I will sell this. Correct? Now I will sell. This is my objective. Agriculture produce, I wanted to sell it. Okay. If you say mango tree. Okay. If you say mango tree. Yeah, in case of mango tree, tree is what? Tree is a bearer plant. Yeah, tree is a bearer plant. Mango is what? Agriculture produce. That is what agriculture produce. Why do you have a mango tree farm? Correct, na? I have, sir, because I will produce mango, sir. Mango is going to be sold, sir. Yeah, is it meant for mango tree only you will sell, na, sir? No, 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 no. That is rarely, sir. When do you sell tree, sir? Suppose like this rains are there, sir. Okay, some cyclone is there. One or two tree fell down, sir. Then what can I do? Cut it and sell it. But my objective is not to sell the tree as a tree. My objective is get the fruit and fruit sell. Correct. Now we'll sell the fruit. That is our objective. Something like that, if it happens, then obviously what can I do with it? If tree fell down, correct, it will die. Once it dies, I have to cut it and I have to sell it off. Got my point? Yeah. Next, what is the useful life of this? Yeah, useful life of it is greater than 12 months. Yeah. So obviously mango tree life is 70, 80 years also it will have life. Okay, right. Third is what? Rarely, but it is not expected. Rarely it may be sold. Rarely it may be sold as a tree. Okay, na? As a tree or agriculture produce. Right, agriculture produce. Okay, na? Right, we are not going to sell it. Is normally very rare circumstance we may be selling it. Under that circumstance, yes, that's okay, but it is not meant for, it is not unlikely, it is not likelihood. Hope you understand. Yeah, it is not likelihood. You may sell it, but okay, that is rare circumstance. Suppose you tell me, my dear, teak tree, teak tree, right? Teak tree, tell me, can I say it is a bearer plant? Can I call it as a bearer plant? Can I call it as a bearer plant? Teak tree. No, I say. Why? Because teak tree will not give fruits or something. Correct. Now, teak tree itself is an agriculture produce. Correct. Now, with respect to here, tree itself. Correct. Now, tree itself is an agriculture produce. Tree itself is an agriculture produce. Got my point? So that's the reason. That is the reason we do not say this teak tree is not going to be agriculture. I hope you understand. Not a bearer plant. Fine. Yes. Chalo, my dear. Let's go ahead with some more points of the standard. Right. What is a PPE, sir? What is a PPE? PPE is a tangible asset. PPE is a tangible asset. Okay. Right. Tangible asset. Correct. Tangible assets which is held for. Yeah. What is the purpose? Why are you holding? Which is held for producing goods. Which is held for producing goods. Which is held for producing goods or for providing services. Yes, it is for providing services. Yeah, it is for administration purpose. It is for administration purpose. Yep. And it is for what? It is for rental purpose. Even if it is meant for rental purpose, yes, fine. And it is a tangible asset. Tangible means you know very well. Correct now. Tangible asset where the useful life. Yeah, useful life is greater than 12 months. Yeah, when you say useful life is greater than 12 months, correct? When it is meant for producing goods or for services or for rentals or for administration purpose, then I say it is a PPE. It is meant for, correct na? Yeah. So there is one item, sir. I will sell, I will buy, I will sell. Then that is called inventory, my dear. It is not PPE. That is called inventory. It is not PPE. Got my point? Yeah. So that is the definition of PPE. Fine. Now, when you look at the recognition and measurement, yeah, when we look at the recognition and measurement, recognition and measurement. Yeah, in recognition and measurement, what do you say? We'll divide into like this. One is initial recognition, initial. Next we say subsequent recognitions or subsequent measurement. Fine. Yeah. When I say initial recognition, getting my point? Yeah. What do you mean by initial recognition? Yeah. Initial recognition means what? Initially at the time of acquisition. Initially at the time of acquisition. That's all. When you purchase it at the time of acquisition, First time when you acquire a fixed asset or a PPE, how do you recognize? At what amount you recognize it? What the standard says, it says record it at cost. Record it at cost. Yes, at cost you record it. Okay. What is that you are supposed to do? You will be recording it. You will be recording it at cost. Okay. Yeah. So subsequent, sir. You will be recording it at cost. Subsequent in the subsequent. Okay. Subsequent means what? Subsequent means on the balance sheet date. Yeah. Sir, I already purchased, sir. On the balance sheet date, what should I do? Then I'll tell you how to depreciate. You have to do something. Correct. So, right, on the balance sheet date, actually we have two things. One normal, okay, na? What is that model? You have two models. You have to select whether it is cost model or revaluation model. You have to select it. Or second thing is what? Any additional expenses. Any additional expense. If any additional expense incurred, if you have incurred any additional expenditure on already recognized asset. An already recognized asset. Okay. Yes, an already recognized asset. If you have spent any money, you understood my point. If you have spent any money on the already recognized asset, whether such expenditure should be capitalized, such expenditure should be charged to P&L. That is also going to be discussed. But we'll come to this subsequent little later. First, let us clear this initial measurement. Okay. Initially for the first time when somebody has acquired an asset, how is it supposed to record? Who is an already cost? Means cost is what do you mean by cost? Cost is what we lost. Don't write this examination may just for understanding purpose. Okay, all right. Cost is what you lost. Correct? Now what is that, sir? How can you acquire this asset? We can acquire it by giving cash or credit. Yes, we say I will give you little later. Excellent. Next way is what? We can construct on our own, self-construction. Yes, self-construction you can do. And the next one is barter system also you can get it. Barter is exchange of assets. Got it? Right, my dear. So if it is cash or credit means you said I will pay you little later or you paid immediately. Okay, fine. What do you write now? Now there is basic price of it. Correct, na? Right. Plus any brokerage. Tell me what all you can add generally. Tell you, all of you participate, please. What all the cost that do you add to the cost of the fixed asset? What all the cost that you add to the cost of fixed asset? Getting my point? What all you will add it? Yeah, basic price plus brokerage. Correct, na? Yeah, brokerage. Yes. Next, freight. Very good. What else? What else do you? Installation expenditure. Perfect. Installation expenses. Yes. Next. What is the next? Trial run expenditure. Trial run expense. Correct. Now, trial run expense may you write net you should write. Okay, right. Net mean, what do you mean by net, sir? Net means, my dear, trial run ke liye, suppose you spent 1 lakh rupees trial run, sir. Correct, na? Trial run ke liye you spent 1 lakh. But out of that, getting my point, out of 1 lakh, suppose you made some product which is not a good quality, but still you sold it for somebody at a cheaper rate. Correct? It may be a loss to me, but still I sold it. Okay, I got 10,000 rupees. Right. That means what you lost? What you lost on the trial run, this is what lost, that is equal to cost. That's why here only 90,000 rupees is what you are supposed to take it. Understand? Next, anything else, my dear? Professional cost, setting up cost. Correct, na? Setting up. Yes, setting up cost. Next, professional cost, professional fees. Yeah, any registration charges. If it is a land building and all, you are supposed to registration. Correct? Yeah, registration charges. Yes, obviously all that going to be part and parcel. That's all. Not that's all. Present value of decommissioning. Present value of decommissioning. This you should not forget. Correct? Present value of decommissioning or restoration. Present value of restoration, these costs are also supposed to be considered, which we'll discuss in some time, plus all other costs, directly attributable, okay, plus all other costs which are directly attributable, that is also going to be correct na, considered here, right? Yes, minus if there is any discount, correct na, if there is any discount or if there is any rebate, right? Minus if there is any government grant, correct na, government grant directly related to fixed asset, it can be reduced from the fixed asset. This is what cost of, correct na, this is what cost of PPE. Yeah, whatever number comes here, then you will say PPE account debit, E number 2, yes, you must have paid cash, or it may be payable, correct na, it may be payable, or it may be a provision, agree? Like that we will be taking care. Fine. Now sir, if it is a self-generating, if it is a self-construction, you only constructed some building and etc., then what will happen? Means all these costs, okay, all these costs, yes, obviously, plus all these costs are going to be considered, right? All these costs are going to be considered, plus that's all, not that's all, any allocable overheads, yeah, some overhead you have spent some money, yes, any allocable overheads, right? This is conversion cost, why, right? This is not fixed asset, no, this is not inventory to convert, right? Allocable cost, allocable overhead in the sense, yeah, suppose you used power, yeah, from your office only you pulled the line, and which is going under construction, you used power connection, you gave it there. So when you give power connection, what will happen? Obviously, what will happen, my dear? You will get more power bill. Yeah, I excess money whatever you have incurred, correct now, for the purpose. But end of the day, you remember one point: it should be directly related to construction. If it is directly related to construction, then we will add it. If it is not, then we will not add. That's all. Okay, next, borrowing costs. Yes, borrowing cost. If it is a QA, as per accounting standards 16, correct na? If it is a QA as per accounting standard 16, yes, then also we will be adding. All these costs are going to be taken into account to determine what is the cost with respect to self-construction of an asset. Agree? Right. Here, tell me, my dear, what all you do not consider? What all should not consider? Should not add, or should not be part of cost. Tell me, what are the cost? Do you know anything which should not be part of cost of fixed asset? Any idea? Yes, all of you participate. Which should not be part of. Yeah, one is general administration cost. General administration. See, general administration means what? You have an office boy, you have one reception, correct? Now you have some maintenance people. Arey boss, these people will be there whether I construct a new building, do not construct a new building. Where I purchase a machine, when do not purchase a machine. Agree? Then why should I add? I don't need to add. That's all. Correct? Any selling and distribution cost. This also, it is nothing to do with respect to selling. Correct? Na? We are constructing our own asset for using for our own purpose, not for selling or anything. Right. Next one is abnormal loss. I told you any day abnormal loss should go to P&L. Correct. Abnormal loss of raw material, abnormal loss of labor, abnormal loss of overheads. No, that we should not add it to the asset value. Correct. Now, how come loss will be adding fixed asset here? Loss will give fixed asset. That is too much, isn't it? That is too much. You should not do it. Right. Next is abnormal loss. Next, yes, inauguration expenditure. Inauguration expense. Yes, opening ceremony expenses. Obviously, you are not supposed to take it. Yes. Any advertisement cost? Yes, advertisement cost. Yes, advertisement cost. Yeah, these are all should go to profit and loss. These are all should go to profit and loss. Right? Not only that, if you have any internal profit, yeah, internal profit. If you have any internal profit, this also you're not supposed to consider. This also you're not supposed to consider. Internal profit means what, sir? Internal profit means, see, example, we are only right, correct na? We are buying steel and we are selling steel, or we are making a steel. Okay, sir, we are making steel. Okay, one ton. Okay, whatever, 1 ton is equal to, sir, 40,000 rupees steel, sir. Example. Okay, you used 1 ton. Generally, this is what my cost. Yeah, but I will sell it to them in the market. I will sell it for 45,000 rupees. I will sell it. But when you are capitalizing, you have to capitalize at 40,000 rupees. You cannot capitalize. Generally, if I had sold to customer, that kind of concept, no. Because you can sell it to customer, but you can't sell it to yourself. That what profit? Correct? Profit, internal profit, 5,000 rupees, you should not take it. Yeah, this amount only you should capitalize it. Yeah, you have to capitalize at 40,000 rupees. Got my point? I hope all of you understood. Perfect. Let's go to the barter system. Barter system. Yeah, in case of barter system, my dear friend, okay, barter system may, right, there are first two conditions. First only two conditions are there. Yeah, if you satisfy one way of accounting, if you do not satisfy another way of accounting. First condition is what? Is there commercial substance? Commercial substance is there. Commercial substance exists. Yeah. What do you mean by commercial substance? Don't expect a question they will ask on commercial substance. Commercial substance means the asset what you give, the asset what you give and take must be two different things. Yeah, it may be machine, but two machines are same. Not just because that is machine means. Hello, understood? Suppose you give me your BMW car, I will give you my Maruti car. Sir, what are we exchanging? Cars. So car same na, sir? That is nonsense, sir. Correct na? Obviously car same. How can it be, my dear? Car same? Just because car name is there. So obviously machine. Some students ask me generally this question. Sir, this is also machine, this is also machine. So what to do? Nothing to do. Machine, correct na? Do you know what exactly machine is it? It's a different model, different value. Correct na? Maybe my Maruti, whatever, my Swift car, that is new. Correct na? Your BMW may be old. Correct na? Okay, we are exchanging. Whatever you are interested in, my car, I am interested in your car, we are exchanging it. Could be whatever the reason, yeah. But these cars are not obviously not same, no. Right? It is two different. Value may be same, but items are obviously two different things. Correct? Yeah, we'll talk about deferred credit period also. Just wait. Right. Commercial substance is there. Commercial substance means what? Asset given. Okay, what do you mean by commercial substance? Simple. Asset given and asset taken are different. Okay. Yeah, just to say that asset given and taken are not one and the same. These two are two different things. Just to prove that these two are two different things. Understood? Right. We are telling that there is a commercial substance. Okay. And you have to satisfy both the conditions. Right. Okay, sir. What is second condition? Yeah, second condition is equal to what? We can measure the fair market value of asset given. Yes, fair market value of asset given or asset taken can be measured reliably. It can be measured reliably. That you should ensure it. It can be measured reliably. Okay, right. Have you satisfied both the conditions? Yes. Question we'll ask. Both satisfied. Have you satisfied both the conditions? Then what is your answer? Yeah, my answer is equal to yes, sir, we satisfied. Correct? No, sir, we have not satisfied. Yeah, if you satisfy, na, we will record it. This is called fair market value model, we'll say. Fair market value will record it. This is book value model, we will tell. Okay, either yes or no. Book value model we will follow. Right. Sorry, fair market value means what, sir? Record the asset received. Record the asset received. Okay, sir. Record the asset received at what amount? At fair market value of asset given. First asset given, first priority will be going to given. Why? See, I am giving you this gold ring to you. What is that I lost? The market value of it is what I lost. Correct. Now, if I go to a gold shop and sell this one, you understood? If I go to gold shop, correct. Now, if I go to gold shop and sell it, yeah, what do I get? Say, if you say example, 30,000 I'll get. By giving a gold ring to you, I lost 30,000 rupees. Agree? Now, if I have sold, I would have got 30. So, by giving it to you, what is that I lost? I lost 30,000. That's why fair market value is what I lost. What I lost is my cost. Correct. So, what is the cost here? Cost is what you gave. The fair market value of what you gave is the cost. Hope you followed. Right. Yes. Right. Second point is the fair market value of asset received. Yeah. So, if you are not able to, correct, na, this is first priority, this is second priority. Sir, if I am not very sure how I am giving, sir, but I don't know how much I will get. For gold, it is not applicable, obviously. Gold, though, I know now what is the value I have given to you. Yeah, very clearly I know that. If it is other than that, then we'll say whichever is clearly evident. Whichever is clearly evident. Yeah, what is clear? What is clear? Clear evidence, which is fair value of which one you can measure it better. Sir, fair value of what I gave, I can measure better. Then take this only. No, sir, this can be, second point is more better, sir. Okay, no problem. Correct? Yes. So when you're exchanging like this, next, what is the point here? Whichever is clearly evident. Next, if there is any profit, yes, there can be any profit, there can be any loss, that should be transferred to profit and loss. That should be transferred to profit and loss. One small example I'll give. Okay, this is my balance sheet. Okay, yes, land is there. Land book value is equal to, okay, land book value is equal to how much, sir? 2 lakh rupees, sir. Okay, excellent. Yeah, now what are you getting? We are getting car, sir. Okay, what do I say? First, asset given. Yeah, asset given is equal to land. I gave land, sir. Okay, nice. Next, what about next one? Asset taken, asset received. Asset received is equal to brand new car. This is new car. Yeah. What is the fair market value of the car? Fair market value of the car is equal to 10 lakhs, sir. I asked 2-3 showrooms, approximately everybody told same. Maybe 5,000, 10,000 rupees different. Otherwise, everybody told same. Right. Tell me, if fair market value of this, tell me, out of these two, land fair market value, can you measure clearly? Or car fair market value, can you measure clearly? Answer me. Which one you can measure it clearly? Which one you can measure it clearly? Getting my point? Yeah, obviously car. Correct. Now, obviously car you can measure it better. That's why recognize the asset at the fair market value of what you have got. Listen. Now, first, have you lost land? Yes, I lost land, sir. Okay, land. Land gone means the land account should be cleared from the books. Yes, sir, I should remove. That's why 2 lakh rupees. Land account shows debit balance. I'll credit it. I'll make it 2 lakh rupees credit. Perfect. Now what has come? Car has come. So car account debit. Yeah, car is the new asset. Asset received should be recognized at fair market value of asset given. Land, but it is not very clear. So then you can go with fair market value of the car. What is that value? 10 lakh rupees. Okay, that means is there a difference or not? Yes, sir, there is a difference. That is the balancing figure. This amount only should transfer 8 lakh rupees to profit and loss. Like this, you are supposed to recognize the journal entry. Okay, this is what you are supposed to do it. Fine, my dear. Next. Fine. Next, what do you do, sir? Yeah. Next one is, sir, there is no commercial substance. What is commercial? No commercial substance. No commercial substance means what? Sir, items are both are one and the same. Exactly same, sir. Oh, is it? When it is same item you are exchanging, why should I pass a journal entry first of all? Correctly, agree or not? Yeah, correct. No? Sir, my car is also same, sir. My car also exactly which day I purchased. This guy also purchased same day. Now today we are just exchanging. What reason? Some nonsense reason. It is irrelevant to us. Correct? No? Whatever the reason it is, right? We are exchanging. How does it matter, right? So just same car, same capacity, everything is same. So then, actually speaking, you are not supposed to record. We are not supposed to record journal entry, correct? But yeah, when items are same, correct? Now here, what is that I said? Items are same. What you gave, what you got, both are one and the same, right? Then that's why what do you say? Recognize the asset received. Recognize the asset received. Recognize the asset received at the book value of asset given. At the book value of asset given. That's it. Recognize the asset received at the book value of asset given. Book value, that's all. Okay. Suppose say this is the balance sheet. There is an X item. Okay. What is the book value? Sir, book value is equal to 1000, sir. Okay, excellent. What you have got? What you have got? I got Y, sir. Right. We are not supposed to bother about here. There is no concept of fair market value, first of all. Clear? Right. Next point to be noted. There will not be any gain, no gain or loss. No gain or loss to profit and loss. Why, sir? Array, when items are same, how gain or loss will come? Correct, na? Common sense question. How come gain or loss will come here? Assets both what you are giving, what you are taking, both are same. Obviously, not cost at book value. Book value is different. Cost is original cost. Means long ago when you have paid money, that is called cost, my dear. Okay, right? That is different. This is different. Yeah. So there is no gain, no loss to profit and loss account is one. At the same time, correct? Na? Then adjust it with any cash. Adjust it with any cash given or taken. Any cash given or taken that you are supposed to adjust it. Okay, how do you do it? Very simple. I'll tell you. How much is the book value? 1000. Okay, I'll do like this. Two circumstance. Yes, we gave 500 rupees cash also. Right, then we got X. Yeah, we got 500 cash plus Y. Okay, yeah, so we gave 500 cash plus X and we got only Y here. This is what the information. So now what's first basic thing? What have you lost? X I gave, sir. Okay, X you gave. X value, book value is equal to how much? 1000. Okay, that's all. Not that's all. Have you given cash also? Yes, sir. How much is the cash you gave? 500. Right? Yeah, that's all. Y account debit. Y account is the balancing figure that you remember blindly. Okay, Y account is the balancing figure that you please remember. That's all. Y account debit to X to cash. Okay, fine. Now, next point. Yeah. Got 500 plus Y. Now tell me here, what is that? We got 500 rupees plus Y. What should I do now in this case? In this case, what am I supposed to do? We got 500, correct? Now, so cash account debit 500. Have you given X? Yes, sir, I gave X. That is equal to 1000. Now, have you got Y? Yes, sir. Y is always balancing figure, I told. So, Y is balancing figure. That means this is the balancing figure left over. That's all. But is there any profit and loss? No. Is there any profit and loss? No. This is what we do. This is what we do in case of this. Which one? Barter system mein like this. We have two conditions to satisfy. When you satisfy both the condition only, then we will go by fair market value model. Otherwise, we'll follow book value model. We'll recognize the new asset at the book value of other asset, and it may be adjusted with any amount received or any amount taken, correct? Received or given, whatever it is, we'll just adjust it like this. You are supposed to recognize the journal entries. Hope you all of you followed. Fine, right? Yes, someone was asking deferred credit. Yes, if you have bought on deferred credit, yes, if you have bought on deferred credit, deferred credit basis. Yeah, what is deferred? Deferred credit. Deferred means first what? What do you mean by deferred, sir? My dear, deferred means postponed. That's all. Deferred means postponed. Postponed. That's all. Okay. Credit means deferred credit. Credit means credit period here. Okay. Credit period here. Yeah. So generally normal credit period. What is normal credit period? If you purchase any goods, within how many days generally what people expect you to pay? What do they expect you to pay? Maximum 30 days. Okay, max to maximum 3 months. Correct. Now that is too much actually. Maximum 3 months anybody can say. Okay, you take goods today, you pay me in 3 months time. You take goods today, but you pay me in 3 months time. Understand? Correct? Yes. So we'll pay you in 3 months time. Correct? Right. Suppose if the example, if someone says, Ravi, take car, no, you pay me after 2 years. Suppose if the credit period is equal to 2 years, example, isn't it too much postponed, my dear? Obviously too much postponed. Agree? Yeah. So since it is too much, it is postponed. Correct. Now why is he giving too much? 2 years ka credit period first of all? That means whatever he is charging from me, that has what it has? It has obviously interest. It has some interest element, pakka, for sure. For sure, there is an interest element. Got my point? Right. So if the credit period is equal to 2 years, then invoice price, correct? Na? Invoice price has interest element. Invoice price has interest element. Yes. Yeah. What are we supposed to do? That's why invoice price you have to bifurcate it. Okay. What is the bifurcation? What you say? How much is the cash price? How much is the interest? Okay. Yeah. So how do you do it? Interest, correct. Now how do you calculate cash price? It may be given. Sometimes in the exam it will be given, or nothing but present value of future cash flows. Present value of future cash flows. You can calculate it this way also. You must have heard present valuation, right? Yeah, present valuation and etc. Yeah, mock test papers, no my dear, this is only concepts and some examples I will explain. I will not be able to teach you mock test paper separately. That a separate class has to be conducted, we will conduct it. Okay, but right now, no, in this class, solving, let's see, if time permits, we can take it up. Fine, otherwise, no. Right. So present value of future cash flows. Right, you can calculate it. Yeah, that is what something correct now. What is the invoice price into 1 divided by 1 plus r to the power of n, something like that. You can try that. Suppose, yes, the example, this is invoice price is equal to 2 lakhs, sir. Cash price has come to 1,80,000. It has come, sir. Then interest is obviously 20,000 rupees. 20,000 rupees interest is an expense here. It should be charged to profit and loss. Yes, take it to profit and loss. 1,80,000, what am I supposed to do? Yes, you recognize the fixed asset. You recognize PPE. Recognize PPE. Yeah, today at Y0, what do you record? Today at Y0, what do you record, my dear friend? Today at Y0, what am I supposed to record? We will say fixed asset, correct? Now PPE account debit, and we say payable correct na? Payable is equal to 180,000. 180,000, that is equal to, at cash price you are supposed to, it should be recognized at cash price. Sir, but I have to pay him na 2 lakh rupees. Yes, you have to pay him 2 lakh rupees, correct? They will be giving some percentage, example 10% or 11% or something they must have given na? Right. So at the end of the y1, at the end of the y2, what are we supposed to do? You should record like this. What is that? You should record interest expense account debit, which will be charged to profit and loss. Okay, yeah, to what? To payable. To payable, you will record XXXX. Automatically what will happen after recording the second year journal entry? Your payable balance will exactly come to 2 lakh. Yeah, because you are adding a 20,000 day, it will be added by applying the interest percentage exactly, not like 10,000 exactly I will do, sir, not like that. They have given percentage, means you have to apply the percentage specifically. Okay na? Right. So it is payable. Hope you understood. Done. So now what do you do, sir? What do you do? Payable account debit to cash, we will pay 2 lakh rupees and our responsibility is over. Remember, if there is a deferred credit period, you have to recognize it at cash price. You have to recognize it at cash price. That is one important point. Yeah. Second most important point is present value. This actually we'll discuss it under accounting standard 29 may we'll discuss. Where do we discuss? AS 29 may I will be discussing. But here, little bit we have to discuss. Yeah, that is present value of decommissioning, present value of decommission, or present value of restoration. Yeah, sometimes, yeah, they will tell, sir, I am taking this building for 5 years lease. Okay, take, very good. Sir, can I install my machine? Install, aram se. Right, then what, sir? Now when you are going, properly take it out. Means you have to uninstall and take it properly. How I gave you this building, in good condition, you should give me back in the same condition. You should give me back. Understood? Okay, yeah, you may be using it for right now. Use it. I don't say no to you. But when you give me back, it has to be in very good condition. Understand? That means I'm supposed to pay the owner some money for that, right? So isn't it because of this obligation has come because of the installation of machine today? Yes. So are we liable? Yeah, correct. Now the minute you install, at the end of the 5th year, you are obligated to remove it. Correct. Why it has come? It's directly attributable to machine. It is directly attributable to PPE. Correct. Now, because you have got the machine, because the machine has been installed here. Agree? That's why this responsibility has come to you. This responsibility has come to you. Got my point? Yes. Now, what do I say? Yeah, under that circumstance, what are we supposed to do? Yeah, whatever. Yeah, a present value I told. Yes, calculate first present value. Calculate present value of future liability. Calculate present value of future liability. That you are supposed to calculate. Okay, we'll calculate, because if they say, sir, 1 lakh rupees will be happening at the end of the 5th year. Yeah, discount rate is equal to 10%. If they say, then what is the present value of it? Present value of it will be 1 lakh into 1 divided by 1.1 to the power of 5. That is equal to 62,100. Something will come. Not exact amount. Okay, some rough figure. Okay, what are you supposed to do? Y0. What is the machine cost, sir? Yeah, say example, machine cost is equal to 10 lakh. Right. What are you supposed to record, my dear? You have to say PPE account debit 10,62,100 rupees. You have to recognize it. Yeah, for machine I paid cash 10 lakh rupees, and with respect to 62,100, you should say provision. You should recognize a provision. Provision is supposed to be recognized. Understand? Provision is supposed to be recognized, like this journal entry to be recorded. Yeah. And okay, sir, provision you recorded right now. What do you do, sir? This is at Y0. Correct. at y1, y2, y3, 4, 5. What do you do? We will do like same unwinding we call. What do we do? Unwinding. Unwinding we will call. Unwinding means what, sir? Unwinding means interest cost. Okay, interest expense account debit. Yeah, interest account expense account debit to provision. Is 62,100 is there na? At 10%. So 10% means 6210 will happen. Okay, yeah. What is closing provision, my dear? What is your closing provision? Closing provision is equal to 62,100 plus 6210 is equal to 68,310. On this 10% again, that is equal to 6831. 6831. Okay. Yeah, once you total, this will come to 75,100. Some number will come on this 1000. Again total on this 1000, 10%. Again total on this 10%. This is called unwinding. What is it called? Unwinding. Sir, which rate I should apply? Which rate you discounted initially na? Adhe rate you should apply. Yes, this concept, it is linked with, correct, it is linked with accounting standard 29, read with accounting standard 10. Both you are supposed to, both you are supposed to read it. Then you will understand this concept clearly. Anyhow, I have explained you the concept, right? Next, important, very important concept, that is component accounting. Okay, component accounting. Component accounting. What do you mean by component, my dear? What do you mean by component? Right, component means what? All significant components. All significant components. Yeah, what do they say? Account for separately. Yes, account for separately. Yeah, significant parts. Yes, any significant part. One machine is there. Okay. Yeah, one machine is there, sir. This machine is, I can divide into 3 parts, sir. You record part 1 account debit, part 2 account debit, part 3 account debit. Yeah, maybe part 1 part 1 life is equal to 6 years, part 2 life is equal to 8 years, part 3 life is equal to 7 years. Could be. It may need to be replaced after 3 years or 4 years or whatever, something, correct na? So if you have different lives are there, yes, no problem. Different lives only, I mean accordingly, based on the life, based on the usage, based on the replacement requirement, correct na? Yeah, totally sir, my cash is equal to 10 lakh I spent. Yeah, some reasonable basis may allocate the 10 lakh rupees. Got it? Yeah, suppose I make this is 4 lakhs, this is 4 lakhs, this is 2 lakhs. Agreed. E 4 lakh you depreciate over the 6 years. E 4 lakh depreciate over 8 years. E 2 lakh depreciate over 7 years. Something like that you are supposed to do. Don't combine and say machine account debit to cash. That is wrong. That is wrong. Fine. Each significant component of the PPE, has to be recognized separately. It has to be recognized separately. Understood? Yes, that is one of the important point. Right. Chalo, my dear. Now let's go to subsequent measurement. We are through with which one? We are through with initial recognition. Initial measurement concept is over. Yeah. Now subsequent measurement. Subsequent measurement we are reading now. Yeah. When it is subsequent measurement, okay. Yeah. First part what I say, not on the balance sheet date. First what I say, we have incurred expenses. We have incurred expenses. Yeah, we have incurred expenses on already recognized asset. Already recognized asset. Getting my point? We have incurred expenses on already recognized asset. What is that, sir? What does that mean? Simple example. I'll say I had already building constructed. How many years old, sir? 3 years already old, sir. Okay. Now what are you doing? New floor we are constructing. Yeah, new floor I am constructing on the same building. Already 3 floors are there, sir. Now I got a permission from the local municipality, sir. Correct, na? Fine, no problem. Now fourth floor you want to construct. Correct. For fourth floor, I spent 25 lakh rupees construction cost. Correct. Is it a new building? Nah. It is not a new building, sir. It is same old building. Eh? Correct, na? On the old building only, I spent some more money, sir. No problem, no problem. Now, 25 lakh rupees shall I charge to profit and loss, or shall I capitalize? That is the question which comes to mind. Got my point? Yes. So what do I do now? Yeah, here for whether to capitalize, question is what? Whether to capitalize the subsequent expenditure or does it need to be charged to profit and loss? That is only the question. Okay, right. Just a second. Yes. Now it is based on two conditions, my dear. Yeah, it is based on two conditions. Just a second. Yeah, done. So what are the two conditions basically? Yeah, two conditions are this. Okay. What do you say? Does it satisfy PPE definition? First question we'll ask. Okay, means basically asset is already PPE and that you are spending. Correct, na? Yeah. So does it, I mean, whatever you are, that means want more than 12 months benefits. Yeah. Do you get the benefits for only 1 month, 6 months, or do you get a benefit for more than 12 months benefit? Okay. That is first and foremost thing. Yes. That's all. Not that's all. Second condition is what? Okay. Do you get probable future economic benefits? Probable future economic benefits, and can it be measured? Can be measured reliably. Can it be measured reliably? Understand? Yes. So this is PPE definition. First one, probable future economic benefits inflow, and it can be, this is nothing but asset conditions, my dear. This is nothing but asset condition. If you satisfy both the condition, do you satisfy both the conditions? If you say yes, then simply we will say capitalize it. Capitalize it. And if you say no, sir, no, sir, what is that example? Sir, I did example. What is that? Maintenance cost. Maintenance cost. What do you mean by maintenance, my dear? Maintenance means you are trying to maintain the existing position. Correct? Yeah, you're trying to maintain the existing position, that it is not going to increase any future economic benefits or something. Nothing. Whatever the economic benefits are used to derive, same economic benefits you will derive. This expenditure is to maintain the existing position. That is the reason that should be charged to profit and loss. That should be charged to profit and loss. But there is an exception to this. There is an exception to this. What is it, sir? If it is a major maintenance cost, major maintenance or overall, correct, na? Overhaul cost, something. Okay, this, if you prove that it is useful for more than 1 year. If you prove that it is more than 1 year, yeah, maybe a legal requirement which you are doing it. If I do it once, I don't need to do it for next 2-3 years, something like that. Yeah, generally in case of ships, this is required. Yes, under that circumstance you capitalize it. Yeah, you can capitalize as a separate component. Okay, as a separate component means don't add it to the fixed asset. Major maintenance cost account debit to cash, whatever, correct, na? Suppose major maintenance cost account debit to cash. ऐसा record करो. Done. Whatever you spend, sir, I spent 3 crore rupees on that. Fine. This is useful for 3 years. Okay. Next year, what you will do? Depreciation account debit to major maintenance. Correct. This sentence will write. Yeah, 1 crore, 1 crore, 1 crore, 1 crore, 1 crore, like that. You charge it off to profit and loss as a depreciation. Charge it off to profit and loss as depreciation. That's it. Fine. That is the basic matter. Right. And the next point. Next point is what? On the balance sheet date. On the balance sheet date. Yeah, there are two models are available. Yeah, what are those two models? One is cost model, correct na? One is cost model. The next one is revaluation model. Revaluation model. One is cost model. The next one is revaluation model. Agree? Right. E models two models you can select for each class. Yeah, select for each class. Select for each class. Each class of PPE. Yeah, you can select it for each class of PPE. You can select separately. Understand? You can select it for each class of PPE. Right. Done. Now listen carefully. Select for each class of PPE. I told you. Yes, excellent. So now what you say means each class of PPE means what? For land you can have one model. For building, yes, building is different, land is building, separate. You can have separate model. Plant and machinery you can have one model. Okay, sir, cars, vehicles, I want to have separate model. Welcome, no problem. You can have separate models. Right? For each, it's not that all the PPE we should follow only cost. All the PPE should follow revaluation. There is no such concept as such. Okay, there is no such concept. Fine. Yeah, if you follow cost model, then what do you record, sir? We say cost, correct, minus whatever the accumulated depreciation so far, you will deduct it, minus accumulated impairment loss. Accumulated impairment loss. Okay, that you will cut it. Yes, this is the number. Got it? This is the number. E number, this will be presented. This will be presented. Where it is presented? It is presented in the balance sheet. Cost minus accumulated depreciation. Cost minus, from there minus accumulated impairment loss. Yeah, that is loss due to other than normal usage. Means maybe because of the market condition, number of reasons. Okay, the value is down, that you are supposed to reducing it. You are reducing it. Revaluation model you are following. Follow means what? Means what? You are supposed to measure the PPE at fair market value. Measure the PPE at fair market value on the balance sheet date. Measure the PPE at fair market value on the balance sheet date. Okay, then what are we supposed to do? First depreciate. First depreciate. Okay, sir, as usual depreciation karo. Yes, sir, kar diya. Then what are you supposed to do? Then you will get book value na. Book value. Then compare it with book value. Compare it with fair market value. Market rate se compare karo. Sorry, sir, I will compare it, sir. Yeah. Now in this comparison, my dear friend, okay na, in this comparison, is it significant? Is it a big difference? Is it significantly different? That is the question mark you should ask. Yes, sir, significantly different. Yeah, no, sir, hardly. Small difference is there. Oh, is it small difference? Small difference, and what you will say? Don't revalue, yeah. For small thing, why do you need to do accounting? Ignore it. Okay, na? Check next year. That's all. Check next year. Next year, mein check karo. Right. If you are correct, if you don't find any big difference, check karo. Next year there may be one more difference. Na? That time you are supposed to look at it. Right now, just forget it. Okay, sir, done. What about yes? Then revalue the asset. Yeah, revalue the asset means what? Yeah, get it valued by professional. Get it valued. Yes, it should be valued by a professional. Correct na? Competent person. Professional. Yes, a professional valuer should do this job. Who should do this job, my dear? A professional valuer should be doing your job. Okay. Next, sir. That is fine, sir. But accounting, how do I do? When it comes to accounting, if you are doing for first time, correct na? Yes, accounting. First time I am doing revaluation, sir. Excellent. Now, it can be upward revaluation or it can be downward revaluation. Correct na? Upward revaluation. Upward revaluation hai to what are you supposed to do? Transfer to revaluation reserve. That's all. Transfer to revaluation reserve. Ko transfer karo. That's it. What can we do? Means what? Means what you say? Fixed asset account debit to revaluation reserve. Sir, downward, sir. Downward means what you should do? Charge to profit and loss. Charge it. Hit profit and loss. Profit and loss account debit to PPE or fixed asset. Correct? Charge it to profit and loss. If it is down, first time when you are doing, yeah, I am talking about what? I am talking about for the first time. First time when you do such kind of thing, yes, you should follow this. Hope you understood. Yes. That's all, sir. Not that's all. Yeah. Say example, your cost is equal to, correct, not cost, let me say book value is equal to 1000. Yeah, it became 1200. Okay, it became 1200 means, what is the fair value? Fair value on the balance sheet date is equal to 1200, sir. Okay, then 200 will make it. Correct, na? 200 we will make it. Okay, sir, excellent. Right. Then what is that? What am I supposed to do? Okay, right. Next thing. See, it was 1000. It became 1200. Now, if I ask you to keep a dot, where all you can keep dot? 3 places you can keep dot. One, you can keep dot here in this line. Next, in between these two, you can keep this. That means next year valuation can be above 1200, or next year valuation can be below 1200, or above 1000, or it may be below 1000. Correct na? So there are 3 probabilities next year valuation may take place. That's all, not more than that. Yeah, suppose about 1200, sir, it went to do 1350. It went to 1350. Then fixed asset account debit to revaluation reserve, another 150 gone up. Perfect. This is 1350 ka example above. Yeah, let me say 1050. Yeah, it went down, sir. 1050 down, sir. Correct. If it is 1050 down now, my dear friend, what are you supposed to do? Debit revaluation reserve to the extent available. Alright, I will tell here both circumstances together actually. This one is equal to 900, it went down. Example. 900 is E example. Yeah, what am I trying to tell here? What am I trying to tell? Debit revaluation reserve. Yeah, to the extent available. Yes, to the extent available in the balance sheet. Yeah, sir, still there is a loss over and above that. Okay, over and above that, what are you supposed to do? Hit P&L. That's it. Over and above that, if you have any loss, right? See how much is the down from 1200. Correct? It was 1200 to 50 means actually 150 loss. But what is the revaluation reserve we have available? 200 rupees revaluation reserve is already available. Correct. That's why what are you supposed to do? Revaluation reserve account for this, with respect to this transaction, revaluation reserve account debit 150. Correct. To fixed asset 150. That's it. But what about here, sir? It was 1200. 1200 say 900 means 300 rupees down. Correct. But revaluation reserve is available only. Correct. Now, revaluation reserve account debit 200, sir. Yeah, excess still 100 rupees. 100 rupees is there. 100 rupees you have to hit. Correct. Now, you have to hit profit and loss. That's why your fixed asset will come down. by 300. Your fixed asset will come down by 300. Like that, it will be taking place. Hope you have followed. Yeah. What about downward, sir? First year downward. Yeah. First year it was 1000. 1000 say it became 900. Okay. 900 it became means how much? 100 rupees is the loss. Right. So it was 1000. We brought it to 900. This is the line. Here also, if I want you to put a dot, you can put a dot here. You can put a dot here. That means next step, next number can be any of these numbers. Correct? Na? This I will explain you down. Right. It can go to how many things? 3 possible things. It can go. Where it can go, sir? Where it can go? It can go to 1050. Yeah. It can go to 960, or it can go to 850. Yeah. Lower than 900, higher than 900, higher than original cost. Okay. Right. If it goes down, then charge to profit and loss. P&L account debit to fixed asset. First time down also I charged. This is further down. Further down, why do you think? Correct? Na? So 50, 50. Right? You are supposed to do like that. Sir, it went up. Yeah. Here for these two things, you need to remember one thing. What is that? What is that? To the extent already charged. To the extent already charged to P&L. Okay, to the extent you already charged to P&L, now credit it. Now credit it. Right. Over and above that. Over and above. Over and above that. What are you supposed to do? Over and above that, you credit revaluation reserve account. You will be crediting revaluation reserve. That's all. Okay. Means, yeah, let's come to this one. Earlier, how much? What charged earlier? What charged in the P-wise? That is equal to 100. Correct. Now increase from 900 to 1050. Increase is equal to 1150. Yes, that is the reason. We should say fixed asset account debit 150 to P&L. What you charged earlier? 100. So 100 ko credit karo. Correct. Next, to revaluation reserve 50 ko do it. Next, sir, 960, sir. 960 means how much is up? 60 up. So fixed asset account debit 60, sir. Super. Okay, na? To profit and loss only you do it. First you have to do what you have charged earlier. That you should credit to P&L. Understand? Right. So here still I couldn't reverse what you charged only. Because earlier charged is 100. Correct now. First you should be trying to credit full amount of 100. 100 only not happened. That is the reason this will be happening. Guys, hope you have followed this revaluation accounting. Revaluation accounting. Right. Next concept. Yeah. Next concept, what you say? Asset is retired. Retired means what, sir? This is a human asset to retire. Yeah, it's retired in the sense retired from active use. That is what. Retired from active use means you are not using so regularly. Okay, and it is held for sale. It is held for sale. This is important. Which is important? And first point is this. Second point is this. Means your management must have already decided to sell it off. Yeah, we thought of selling it. Understand? We thought of selling it. Fine. When you thought of selling only, then when both the conditions are satisfied, what do you say? Then we say, sir, measure it. Measure the PPE. Measure the PPE at book value or NRV, whichever is lower. Okay. If there is any loss, you should transfer it to P&L. That is what we will tell. Okay. Measure it at book value or NRV, whichever is lower. Yeah, situation number 1, situation number 2. If you say 1000 here, this is equal to 800. If you say this is equal to 1000, this is equal to 1200. Second situation, if you take which is lower, is equal to 1000. Your book value is already 1000. That is already lower than the NRV. Correct? Na? So then there is no loss. Obviously, no journal entry also to be recorded. No loss, nothing to record it. Sir, here sir, whichever is lower 800. But books mein kitna number hai? And 1000 is there. So isn't it that we are supposed to reduce it? Yes, we have to reduce it, sir. Correct? Na? You have to reduce it. 200 rupees you have to charge it to P&L. Correct? Na? P&L account debit 200 to PPE 200. Like this, you will be recording a journal entry. You will be recording a journal entry like this. Got it? This is one small topic. Okay, but important. Suddenly a question can come. Next topic is derecognition. Derecognition of PPE. Yeah, it's easy actually. Okay. Yeah. First thing what I will say, simple shortcut may I will close it off. Derecognition of PPE. Means what, sir? Derecognition means removal. Recognition means recording. Derecognition means removing from the books. Yeah, removing from the books of account. Yeah. When do you derecognize it? Two reasons. When do you derecognize it? One is sold off. Right. And otherwise no future economic benefits. That is scrapped. Yeah, scrapped off, sir. I sold it on kg basis, sir. Okay, could be. It's no more giving me, it's not giving me future economic benefits at all. Then close it off. Debit, I mean credit. Right. What are we supposed to do? First step, what you should do, na? Calculate either gain or loss on this. And whatever the gain or loss arises from this, transfer it to P&L. Okay, that is. Sir, what do you mean by gain or loss? Gain or loss means what you do? Sale proceeds minus your book value. Your book value. Okay, that number should go to profit and loss. Sale proceeds minus book value should go to P&L. Okay, sir, we have revaluation reserve. We have revaluation reserve related to this asset. Related to this asset. Okay, you have revaluation. That means you must be following revaluation reserve. Yes, revaluation reserve you can transfer. You transfer it to either general reserve. You transfer it to either general reserve or retained earnings. Retained earnings. What is retained earnings means? Surplus name will be there. Na? In reserves and surplus, mein surplus will be there. Na? Surplus or accumulated profits. In the balance sheet, mein what is there? That is called retained earnings. Oh, right. Example. I have a balance sheet. There is a PPE. How much? 100 rupees. With respect to that, there is a revaluation reserve of 20. It's already there. Okay, fine. Now this I sold it. I sold. At how much? 120 ko sell kiya. Fine. So there is a gain. How much gain? 120 sold. 100 is book value. That is equal to 20 is your gain. Correct. So for this 20, what is the journal entry? We say cash account debit 120 aa gaya. Correct na? PP is equal to 100, sir, and to profit and loss is equal to 20. Correct na? Balancing figure. Right. So after passing this journal entry, your asset is gone. Your asset is closed. Excellent. But what should I do with this revaluation reserve? If I say this is journal entry number 1, then you have to record journal entry number 2. Okay, what is the journal entry number 2? Yeah, what do you say, my dear? Revaluation reserve account debit either to GR or to retained earnings 2020. Like this, you should record journal entry and you should close this sale entry. Sale transaction is supposed to be closed. Hope you have followed me. Hope you have followed me. Agreed? Done. Now, next point. Okay. What is the next points are here? Next point, depreciation. I will discuss little bit. We are left with some 10 minutes. Yeah, we have almost every important point we touched up. Correct. Now, one good revision is taking place. Depreciation. One last point, depreciation. What is depreciation? Depreciation, what do we say? It is a systematic allocation. Depreciation, correct? Now, earlier there was a big sentence were there. Now there is a simple definition. What is that? Systematic allocation of depreciable amount. Systematic allocation of depreciable amount over the useful life. Over the useful life. Systematic allocation, we are allocating. How do you allocate? This word is talking about method of depreciation. What is it talking about? Method of depreciation. Yeah, when I say depreciable amount, correct now? Depreciable amount. What do you mean by depreciable amounts are? Depreciable amount means that is the cost or revalued amount minus residual value. Residual value you have to cut it. That is called depreciable amount. Okay, what about useful life? What is useful life means? That is not the life of the asset, amma. Sorry, useful life is different. Economic life is different. Economic life means life of asset. Getting my point? Economic life means life of asset. Okay, useful life means how many years? Say example, there is a car. Okay, car life is 20 years. But Ravi Kanth wants to use it for 10 years and I want to sell it off. Maybe I want to buy another car. That's all. Then for depreciation purpose, I should use the not life of the car. I should use how long I wanted to use it. Yeah, I can say I want to use throughout the life also. Agreed. That is also there. But don't be confused. If they by mistake or intentionally, if they give you economic life as well as useful life, you should take useful life but not economic life. Getting my point? Yeah, that you be careful very much. Fine. So useful life is, say example, after 10 years I want to use it. How? That is expected, correct now? Expected number of years to be used by the entity. By the entity. How long we wanted to use this asset or machine. That's the point. Next, when I say method of depreciation, listen. The method of depreciation, residual value and useful life. All three things. What is that I said? Method. Yes. Next is residual value. Residual value. And third is what? Life. Useful life. All these three things are called as accounting estimations. What are is called? Accounting estimation. We will call it as accounting estimation. Okay, accounting estimation. So that's why what we'll say, management should review at every year end. Every year end my management has to have a look at it. Means, we thought, what is that? Life is equal to useful life. We thought of using it for 20 years. Is it still 20? Or any mindset changed? You want to sell it off in 13 years, 14 years? Could be. It can change. Yeah. So you have to review. And in this review, if any significant change, yeah, what do you get? If there is a significant change aa gaya. Initially what I thought is different, now it is changed. Oh, is it? Then what do we say? Account for prospectively. What do we say? Account for prospectively. Prospectively account karo. Not retrospective. From now onwards. Prospective means what? Prospective means from now onwards. Okay. From now onwards, without considering the past. Without considering the past, from now onwards you will be doing this job. Without considering the past, that is from now onwards you will be doing it. Hope you understood. This is what we will follow, right? Yeah. Next point. Yeah, what is that exactly, sir? Exactly, I'll give a small example, you may get it better. Yeah, I say cost is equal to 1 lakh, say residual value is equal to 0. Okay, SLM method I am following, fine, and life is equal to 10 years, let me say. Okay, then automatically depreciation per annum is equal to 10,000 will come. Yeah, say 2 years depreciation we have done. Okay, sir, that is equal to 20,000 rupees depreciation done, sir. Then 80,000 rupees is the book value. Correct, na? Now our estimations changed. What is your estimation? Residual value, I feel 5,000 rupees, sir. Could be. Okay, na? Life is equal to 6 years, I feel, sir. Remaining life. Okay, na? I feel remaining life is equal to 6 years. Okay, no problem. Fine. I mean, initially you thought 10 years. Now you understood. No, 2 years are already over. Situation is bad. I think maximum 6 more years I will be able to use it. I may not use it more than 6 years. Okay, welcome, no problem. But method is equal to SLM only I am following. I don't want to change that. Welcome. Now what should I do? 80,000 divided minus 5,000 divided by 6 years, like this. 80 minus 5 divided by 6 means, then you will depreciation, now onwards depreciation per annum is equal to 12,500. But we don't go back and correct na, रे you followed so far 10,000 rupees na, इसको reverse करो, extra ज़्यादा charge करो. No, we don't do that. Okay, then we say simply third year depreciation. Okay, third year depreciation 12,500. Now onwards every year 12,500. This is called prospective. From now onwards, without considering the past. Yeah, past means something happened, forget past, move on. That is next. One last point, your method of depreciation. Kya bola? Method of depreciation. What are you supposed to follow? The method of depreciation should reflect. The method of depreciation should reflect. Yeah, what it should reflect? Reflect the pattern of consumption. It should reflect the pattern of consumption. Consumption of what? Consumption of future economic benefits from the asset. Pattern of consumption of future economic benefits from the asset. Yeah, pattern means what, sir? Pattern means ratio. Suppose if you say, I am consuming equally. Yeah, sir, it is a computer, sir. I use same way you'll use. Okay, what is the life? Life is equal to 3 years. Same way you're using, na? Right. That means same way means same depreciation should be charged. Same depreciation will be charged under SLM method. So follow SLM method. Straight. Right. No, sir. More benefits will come to me in the first year. Next year lesser. Next year lesser. Something like that. Maybe WDV method is suitable. Think and accordingly select the method. Okay. Right. So it is not like a blind selection. I'll close eyes and I'll pick something whatever I want. No. How are you consuming the benefits of this? Accordingly you are supposed to. You understood my point? How are you consuming the benefits? In that ratio only you are correct. Now that same thing only you are supposed to apply. Same thing only you are supposed to apply. Hope you have followed what I told. Correct? Right. It is not your selection. That is what we said. It is an estimation. It is an accounting estimation. Right? Guys, we have completed accounting standard 10. Correct? Na? A quick revision of accounting standard 10 in approximately 1 hour 25 minutes. Yeah. I hope I have done almost every important concept. Revision is done. Correct? Yes. You also once again revise it before examination. Conceptually, if it is clear, na, you will be able to handle any sums, you can handle it. otherwise there will be a problem. Okay na? Right, my dear? Thank you. And yes, I'll be back at 7:30 exactly. Let us be back. Let us continue our discussion for the remaining number of standards. Fine. Thank you. See you at 7:30.